If you have followed the news today, this afternoon in Europe, you might have seen an important news fact. The European Central Bank has decided today in Frankfurt to increase the interest rates again. There's a third increase in the last few months and the first increase in around a decade. They increased the interest rates by 0.75 base points. That's quite significant, and I want to share my opinion on what it means for you if you're thinking of buying a property or if you maybe bought a property already. 5 points, 5 implications that you should be aware of. Okay, a bit of context. Why is the interest rate going up? That's basically to fight inflation. The European Central Bank, by increasing the interest rates, wants to make it more difficult to finance consumption, to finance investments. And when everybody buys less, the expectation is that prices go down and therefore inflation would go down. Inflation is around 10%, or was it around 9.9% in September. In Europe, it's very high, should be around 2%, so that's why these things are happening with the interest rates. The expectation is that there might be further interest rate increases as well, maybe later this year. There's another European Central Bank meeting in December, and then there's more meetings next year, so it could go up again in December, could continue to go up in the beginning of next year, depends on how quickly inflation goes down. What are the 5 implications that you should be aware of? Number 1, for new mortgages, they will become more expensive. Mortgages are linked to the Euribor interest rate, that's a reference rate for mortgages. Euribor is now around, for October it will be around 2.6, 2.7%. Interest rates increases make this more expensive. How much more expensive does a mortgage become? Because that's what you want to know in the end. Well, made a calculation. If you take 0.70% more, or 0.75 base points more on a mortgage of 200,000 euros, there will be 1,500 euros a year of additional interest costs. That's around 125 euros a month approximately. On a 300,000 euro mortgage, it's more. It's 2,250 euros a year, and that's close to 190 euros each month. Quite an impact you should be aware of when you are about to take a new mortgage in the near future in Spain. But don't forget the context. Rates today are still way lower than what they were in the period of 2000 to 2008, where we had the Euribor at 5.6%. So it's nearly the double. So keep that in mind as well. People say, yeah, but recently the Euribor was negative and interest rates were like 1% fixed for 30 years or 2% fixed. Yeah, correct. But that is not a usual situation. That was not a usual situation. And it was very, very low, unusual, because of the situation we were in because of COVID. When you read the news and you see a lot of professors and economists talking about what interest rates mean and what would be good interest rates, quite some people are of the opinion that 4 to 5% interest rates are pretty normal on a 30-year mortgage. So that's just some context. So first implication, mortgages become more expensive. Second implication, if you are about to decide on a certain mortgage, if you have different options on the table, don't postpone your decision. Don't wait longer than necessary, because the offers, they are temporary bound. They are valid for 2 weeks probably, might be less, depending on the bank. That's not much time. So it means that although you have an offer from a certain bank on the table, let's say at 3.5% interest, if you call the bank next week, they might change their offer. They might say, sorry, but the conditions have changed, and 3.5 becomes like a higher percentage now. So don't wait if you need to take a decision. Bear in mind as well that many banks are overloaded with mortgages work. They're slow in responding. Some banks will simply not respond because that's one way they use. It's not a very nice way, but it's one way used to filter clients and focus on the target group of customers that they want to achieve. So when you need to decide, don't wait, terms and conditions might change, and they won't change in your favor. Things will become more expensive. Third implication, if you have a mortgage already, if you have a fixed interest rate, no implication at all. You'll pay next month exactly the same as what you paid so far. You'll pay exactly the same also next year, even if there would be further increases of the interest rates. But if you have a variable interest rate, it will go up. Check your contract, your mortgage contract, and see how often, with what frequency revisions take place. Might be every 6 months or every year, and then the next revision, the interest rate will go up, will be higher. Your monthly payback will go up. Okay. And the fourth implication is that banks are becoming more selective, and I think they will become a lot more selective in terms of who they give financing to. It means that some people with a more risky profile might not get a mortgage anymore. What is a risky profile for banks? I talk about buying in Spain. If you are a international buyer, risks mean you have a very short tenure in Spain. You only maybe work here for a year or a year and a half. You're very young. If you're 24, that's not the same as when you're 34. An average income, not a medium or high income, that's a risk factor. Not a large amount of savings. If you have 40, 50,000 euro savings, it was in the past no problem to buy a property. It will become more complicated to get a mortgage, depending on how the bank looks at your risk profile, which risk factor, which risk score they basically allocate to your profile after having studied your case. And the fifth implication is that I think what we were used to, which is like 30-year mortgages on fixed interest rates, they will become very difficult to find in the market. We see it already. Banks are going a lot more to variable mortgage deals, mortgage offers. So the 30-year fix will, if you still can get one, it's great, but see if the interest rate is still attractive, because it might be significantly high. So conclusions, new mortgage is more expensive. If you have a variable mortgage today, will go up next time. If you need to decide between different banks, don't wait, don't postpone your decision. Banks become more selective, and the 30-year fixed mortgages will become significantly less available in the market. If you're not following us yet, if you didn't subscribe yet, do it. You'll get frequent updates from us. It will help you to be better informed and take better decisions. That's what we want for you, to make a positive impact on your financial decisions in Spain.